Hi friends, based on market capitalization, SEBI classified equity mutual funds into 5 types. Present video is about mid-cap equity mutual funds. On market capitalization topic, I made a separate video. Link is available in the description box. According to market capitalization, SEBI classified public limited companies into 3 categories. Large cap category, mid cap category, small cap category. First 100 companies with the highest market capitalization come under large cap category. These companies are well established, reputed and had been in the market for a long period. They are the branded companies and most of the Indians use their products daily. These companies are generally the leaders in their field of business. The shares which are sold by these companies are known as blue chip stocks. Second one, mid-cap category. Mid-cap companies are those which are ranked between 101 to 250 in the list of companies according to market capitalization. Third one is small cap category. These are young and smaller sized companies. 251 and above placed companies based on market capitalization come under this category. Now come to our present topic, that is mid-cap equity mutual funds. For example, one asset management company issued mid-cap equity mutual fund scheme and the company is able to collect 40 crore corpus from 10,000 investors. Now the fund manager of AMC must invest the maximum portion of this corpus, that is minimum 65% of this amount in mid-cap company stocks, and the remaining 35% of this corpus he may invest either in large cap company stocks or small cap company stocks or both. Otherwise, fund manager may invest total corpus in mid-cap companies only. So, what do you mean by mid-cap equity mutual fund? If a fund manager of AMC invests maximum portion of corpus in mid-cap company stocks, that fund is known as mid-cap equity mutual fund. Now let us see some important points related to this fund. First point is, these funds are considered to carry more risk than large cap funds and less risk than small cap funds. When market falls, mid cap funds are not as stable as large cap funds. They are more volatile than large cap funds and less volatile than small cap funds. Thus, the volatility of mid cap funds is moderate. They come with moderate risk. Therefore, these funds are suitable for the investors who are ready to face moderate losses. Second point is, they come with moderate returns. In mid-cap funds, chances are there for growth because fund portfolio contains mid-cap companies, developing companies. When market is high, these fund schemes tend to offer better returns than large cap funds, but they are not as stable as a large cap in recessions. Thus, these funds offer moderate returns. On the other hand, these funds are more stable than small cap funds but tend to offer lesser returns. In a nutshell, mid cap fund is a perfect combination of risk and return. Then next is about liquidity. Large cap companies are well established and developed companies. Small cap companies are totally new to the market. People don't know about these companies. But mid cap companies are developing companies. Therefore, the liquidity of a mid cap mutual funds is less than large cap and more than small cap. Means, comparing to large cap, selling and buying of mid cap mutual fund units is difficult, and when you compare it with the small cap funds, selling and buying of mid cap mutual fund is easy. Then last point is, it is suitable for which type of investor. First point is already completed. Come to the second one. These are suitable for young investors aiming to benefit from compounding investment strategy. Mid-cap companies are in the phase of growth, and a few of them will become tomorrow's large cap companies. So, if you want to get a benefit out of these funds, then it is advisable to stay invested for a long period, that is 8 to 10 years in this scheme. You can get a benefit from one long-term investment strategy known as compounding investment strategy. In this strategy, investor reinvests the interest, dividend which he earns in these funds. As a result of that, he receives more mutual fund units. By doing such a thing, he is earning a return on his returns and the principal. When the principal is combined with the reinvested income, investor's investment will grow at an increased rate. The best way to take the advantage of compounding investment strategy is to start investing as early as possible. The earlier you start investing, the greater will be the benefit. Thus, these funds are recommended to young investors having age in hands. So, eventually remember, mid-cap equity mutual funds are suitable to young investors who are ready to face a moderate risk and who are interested in a long-term investment strategy. This is all for this video. I hope you find it informative. Thank you.